Anything I say or do can be held against me. So, I'm a little looking at the markets here. We're finally past kind of the break-even point. True to form of kind of how we've started several classes here, I would like to start the class off here with a trade. Normally, we did it with dollar Swiss the other day, where we were able to make our full profitability on dollar Swiss the other day. We were able to make full profitability off dollar yen, off dollar CAD. It's been a pretty good week so far, knock on wood, but I'm willing to give it another shot here because this is one that I've been looking at. True to form, we're actually doing the same trade that we did yesterday, to be honest with you. I was looking right down in here at this CAD yen. Everything's kind of been indicating down on it. You've had, lower highs, lower lows happening on the trend line. It broke through this support level. I actually was thinking today of we'd be trading this in either direction, if it broke through this support level or if it broke down and broke above this double bottom right in through here. It's still kind of sitting here at the support, but I'm kind of going to go with more of a risk off trade on this today because the futures are indicating down. We got crude down today. We got some mixed news coming out of Canada. So I'm going to go ahead and start us off by, I'm just going to do a one lotter on this to sell one lot on CAD yen. Put that in here at the beginning of class. So the sell entry is going to be at the market. Market. Everything is in our favor. It's gone -5 or more on the 1 hour totals. It's indicating down. So we got it's breaking through a support level. All three things that we really look for: break through a key level, downward trending trend line, -5 on the totals. So it will probably be a loser. I'm just kidding. The stop here, I'm going to put my stop, and let's see, let me pull up the trade manager here. See where my entry price actually was. So we're at 81.620. I'm going to go ahead and put my stop 50 pips away. That'll put us right above the swing high, 82.120. Put my limit. Since it's Friday, normally on this CAD yen pair, I may look for further risk reward, but since it is a Friday, and since I'm kind of I'm speculating with some of my profits here, I'm going to go ahead and just put my limit, my take profit, 50 pips away also. And truth be told, this may be my only trade for the day. This is the one I was looking at. This is actually the same trade we were in yesterday for Minor FX students. The trade we were in yesterday was essentially we were short dollar yen. Here, I'll pull it up for you. This is what we call being a synthetic trade. We were short dollar yen when it broke down through this level right in through here. We put our stop about 50 pips away, our limit 50 pips away. We were able to hit on that for 50 pips. On the dollar CAD, we had it made this nice little inverted head and shoulders right down in here. It broke through the top. So yesterday we were short dollar yen, short the dollar, long the yen for 50 pips. And we were also long the dollar, short the CAD. So when you're short CAD, long the yen, you're essentially short CAD yen. Synthetic is just more of an, and I know that can be confusing. It's actually options terminology. We're the cross pair here on being short CAD yen. That's more options terminology. It's not really Forex terminology. That can be a little confusing, but essentially it was a cross pair. When we're short CAD yen, we're short CAD, long the yen. And if you were those trades we took in class yesterday, Anna, were roughly the same trades, roughly being short, long the yen and short the CAD. So not to confuse you with some options terminology there, but I think I was waiting until we were clear of the CPI and clear of the Canadian retail sales number and the Canadian CPI. Looks like it's starting to form some tweezers right over in here. But the good news is after making roughly full profit on both these trades from yesterday, made 45 pips on dollar CAD, 50 pips on this. So I'm making 95 pips yesterday. It's not I'm willing to speculate here that on a risk off day here at the start of the market, since everything's kind of lining up for us. Plus, I think the CAD does have some room to go to the upside, at least to the 3,900 level. And the dollar yen, quite frankly, this could, there's some things we can do to kind of hedge this trade if we wanted to, which I'll get into here in just a little bit. But things are kind of turning here in the market. We finally got the break. Dollar yen was just consolidated for, all throughout this time period. The dollar yen was like really consolidated. So we're able to finally get a break to the downside. We got the risk off day yesterday that we were looking for. So, and it's just a one lotter, so we don't have to worry about, if anything, we'd be giving back some of our profits maybe from yesterday and the day before. The other trade that we took during class the other day on Wednesday was we went long here on the dollar Swiss during class when it broke above that 9,900 level. It consolidated there for a while. We were looking for a 1 to 2 risk reward. We were only risking 23 pips. We put our stop right below this low, and we were looking to make back, we were risking 26 pips, and we were looking to make a 1 to 1.5 risk reward. So we were able to capture that 49 pips here. It was roughly 24 hours later when we got it, but nothing really changed. I kept my stop the same. So we were able to capture that 49 pips from Wednesday. So after being, and not to say that it's been a stellar week or anything, because Monday and Tuesday for the week, I was basically trading break-even trades all throughout the week. I was Mr. Break-Even. Even going back to the previous week, it seemed like I was Mr. Break-Even. I kept on moving stops and being stopped out at break-even. So it was nice to get a couple of winners in there. Since we're in that, let me just kind of go around the horn here and show you where we've been. Let me pull up some of the other pairs. Pull up euro dollar, dollar Swiss, and kind of go through our motions of what's shaking out today. So where to start? Oh, first off, I guess place to start here would be what's caused the movements here this morning. You can see on euro dollar, we had a big, before this hour here, we had a big sharp move down of dollar strength and euro weakness. Same thing on dollar Swiss. We had this huge move up right in through here of dollar strength and Swiss weakness. Same thing on the pound. Pound came down in this last hour. Yen had come up. So we were experiencing quite a bit of dollar strength there for a little bit in the market. As far as what caused that, it was news. Let me bring up the news here. News that came out here at 8:30 a.m. CPI, Consumer Price Index, which people were kind of downplaying these indexes. The Producer Price Index, as we recall from Wednesday, was actually better than expected also. Consumer Price Index, they were expecting a negative 0.1%, came out at 0%. That's actually pretty good when you include energy prices in there, mainly oil. The core CPI, which was that excludes food and energy, was expected to be a positive 0.2. It came out at a positive 0.3. These were all inflationary numbers for the dollar, which caused that big dollar spike there at this morning at 8:30. Kind of going around the horn with some other things here. The CPI in Canada, the core CPI and the CPI This includes energy, just like the U.S., excluding food and energy, including energy, actually came out better than expected. The retail sales number, though, in Canada absolutely got crushed. They're expected to be negative 0.5. It came out of negative 1.6. So net, I think that, you would kind of look at that as more of a net negative in Canada. They have prices that had increased, which when you look at what oil was doing there at the end of January, it was starting to recover a bit before it tanked again at the beginning of February. So it's not these CPI numbers could be a little, how should we say, a little misleading, if you will, because we are getting another spike down in oil today, which could cause dollar CAD to continue to the upside. And if we do get an open here in the markets, it looks like the markets all over the globe have been down. We had a down day yesterday in the U.S. markets, and it looks like we're getting some more indications of more bearish pressure on the markets here this morning with the futures. Futures are indicating down 86. S&P futures are down 11. NASDAQ futures are down 26. Looking at Europe and Asia, DAX is down roughly 1%. Financial Times Stock Exchange down about 0.63%. And then Asia hasn't fared much better. Nikkei down 229. Shanghai is down 3 basically. Hang Seng down 77. So global markets are selling off a bit here this morning, and that includes the futures. What that means to us is it's more of a risk-off day. So that's one of the reasons. That's one of the reasons why I'm going short on that CAD yen. If we get a market open here at 9:30 and it continues to the ups, and if it goes up, if we get some buying pressure that comes in, yesterday was one of the first days that it's gone down. Starting with last Friday, the Dow was up like 300 points, and the U.S. stocks were doing fairly well up until yesterday. But if we do get a larger sell-off here this morning, if this trend continues of, one market down, another market down, and then if the U.S. markets, if we get any selling pressure in the U.S. markets, that should fare well for this CAD yen trade. Key news, the pound retail sales. Pound retail sales, I wouldn't look too into, a lot of people are looking at the retail sales number coming out from the GBP from over in England. Forecast was 0.8%, came out at 2.3%. You would look at that as a very good number. However, the previous number got adjusted to the downside. So that's why I say the pound news was a little mixed. When you look at the way the pound reacted overnight, initially you got a little bit of upward momentum, but with that adjustment figure on when those pound numbers came out, it actually brought the pound lower. So the pound continues to get pounded, forgive the pun, or forgive the verbiage. So the pound continues to go down. Commodity currencies are getting crushed here this morning, with New Zealand giving way to dollar strength. Aussie's giving way to dollar strength, and so is CAD. CAD's giving way to dollar strength here. So commodities are down, stocks are down. Looks like a situation where we could be, where we could essentially see some, it's a Friday, so, we got to be extra cautious. We don't want to give away a huge amount of trading profits on a Friday. Truth be told, even though we'll go through some other trading scenarios, if I were to get stopped out on CAD yen, I'm going to take my money and run probably. I'm probably not going to enter in any other trades. If I hit a profit, it would make for a very good week. Even if I get stopped out, it will still be a pretty good week. And I'd rather end on a good note this week than give away more profits by chasing the market and turning it into a very bad week. So that's what we're looking at here this morning. So other scenarios that we can look at today, and remember we'll meet back up again on Monday morning to kind of iron out our week for next week. So, but some other scenarios that you could look at, and it may seem a little odd here, but our risk on on that dollar CAD and dollar yen is essentially going to be if markets recover. If we see oil prices start to go back up, here, let me pull this up on this sheet right over in here. You can see dollar yen, especially going into the news, was starting to make this little double bottom right over in here. So much like that CAD yen was making that double bottom, and it's starting to sell off a bit, and you can see where this consolidation has occurred right in here at about the 113 level. The probabilities would tell us that, if this drops further, we don't have to worry about this dropping any further, because if it drops any further, then the CAD yen is probably going to reach our full profitability. So if we, you'd be asking this yen to continue moving to the downside. You would love it if it broke down through these lows also. Dollar CAD's already broken through into new highs. You would love it if this can break down further on the dollar yen, because that would work out very well for us. But since our risk is essentially risk on today, so what that means is, and let me put this under the strategies, meeting minutes didn't do much. US CPI better than expected. I'm going to put a question mark by that. We'll talk about that here in just a second. CAD news, mixed. CPI better than expected. Retail sales was awful. Strategy this morning is we're looking to trade risk off. So we're shorting CAD yen at the beginning of class. So if oil continues to fall and stocks fall, if we have a risk-off day, that should lead into a profitable trade on shorting on that CAD yen. Our risk is risk on, so that would be markets going up. So reversing course and going up. So if the markets fight the trend, so our risk on scenario would actually be looking to go long on dollar yen. Before I do that, I should probably go ahead and write this out here for you. So stop 50 pips. Oops. Didn't want to do that. There we go. Here, we'll just kind of bring this up. We'll zoom in a little bit on this so we can see it better. There we go. So there's our sell entry. Copy this down. Looks like somebody's got their hand raised. If you have a question, go ahead and if you want to post it real quick, you can get there. Pound dollar, always an option on pound dollar. Pound dollar has been one of our favorite ones to trade. I'll run through some other ideas here, but I want to kind of go through how to handle this trade, and then we'll certainly take a look at pound here. So this is executed during class. And I see David's in here. David, are you coming at us from Starbucks? Oh, no problem, Eric. Welcome, buddy. Always nice to have new people in here, buddy. The more the merrier. People that trade together stay together. So let me go through this risk on scenario with you, and then we can look at some other. We can kind of go around the horn and look at some other things here. So let me go back here to that dollar yen. You know, if you know, with the futures indicating down, we got the stock markets opening here in about 7 minutes. So you know, if the futures are indicating down, you know, our risk is obviously if the markets go up. So to keep it really simple, you know, CAD yen may not even be stopped out if this occurs, because you never know, dollar CAD could continue to the upside. But just in case, if it does, you know, we can look to, this would almost be a hedge, because we're already long the yen. When we're short CAD yen, we're short Canadian, long the yen. But, you know, let's say we get into a scenario where the markets do want to make higher highs today, and we do want to trade into like a yen retracement. It's very simple, you know, we're going to call it a break of the double bottom. And if it goes +5 on the 1 hour totals, so looking here at dollar yen, you can see the dollar yen, you know, as it was making this double bottom, it was starting to come up here. You know, it being dollar neutral on that CAD yen pair is probably a good thing right now. So it was starting to make some higher highs in through here. So if it does break through that double bottom, you don't have to wait for a close. If it breaks that double bottom and you start to see it go +5, I would say you could go ahead and take a shot on it. Your stop, swing low right in through here is 112.741. You can make it a 50 max if you will. Remember, don't trade more than 1 to 3% of your account. I'm only doing a one lotter here on the CAD yen. Friday's not the day to give back a bunch of profits. Never want to turn a great trading week into a horrible trading week by doing something stupid on a Friday. And then you can look for a limit of 1-to-1 risk reward. If you want to lower your risk a little bit, you could probably, you know, if it takes a while for dollar yen to break out, you could kind of look at where the swing low is and just put it below a swing low if you want to kind of lower your risk a little bit. But that is the risk here. I mean, make no mistake about it. If this starts to break here to the upside, then we're gonna, you know, you could easily see the dollar yen. It could make a, you know, a recovery here back to where the consolidation levels were. So go ahead and snip that one, and that'll be kind of a hedge trade. The risk would obviously be a whipsaw market. Let's say that dollar yen breaks through that high and CAD yen gets stopped out, and you were to go long dollar yen for that same 50 pips. You know, your best case scenario at that point is probably more of a break-even scenario. But the risk would be if the markets whipsaw you, which we all know can happen. Say stocks open down, they make a recovery, dollar yen executes to the upside, and then we get a whipsaw and stocks go up and then they sell off again here. That's certainly what the risk would be here. I highly doubt I would even place this trade, but it would be a good little hedge scenario, if you will, for just in case the dollar yen breaks to the upside with any type of volatility. So when I say hedge, that means that your chances of being net profit for the day would probably be low. but you might be able to recover some losses is should you get stopped out on CAD yen. Nick says he's got to run, so Nick, have a safe trip. Have a safe trip on your return trip from you're in what, Nairobi right now in Kenya? So have a safe trip back to Canada, buddy. Just drink a bunch of Molson's on the plane. You'll be fine. That's always the way I do it. All right. Pound dollar is one to where you can kind of look at particular scenarios. Here, let me pull this. Sorry, I pulled this up on the wrong trade screen again. There we go. Pound is one that, with, here, let me pull it up on a kind of a daily chart here and kind of see where it's been on the daily chart. It was starting to come back up, consolidating. It's just now been breaking into lower lows right in through here. I've been overly bearish on the pound. It's just I've been missing out on some opportunities on it as of late. Going back to the hourly chart, which we usually work with, the only thing that's a bit scary with the pound here is the fact that it has been making some higher highs in through here from the LP trend line, liquidity provider trend line. It's already made some pretty big moves to the downside. The opportunity that I was actually looking at potentially overnight was actually because it made such a nice tight consolidation in through here. I was looking, this would have been a nice little trade here as after that news came out of being able to short it when it broke down below that consolidation. We were already long dollar CAD, so I didn't see any reason to go short on pound dollar at all throughout that time. But, looking at it now through this support level right in through here at the 42.50 level, you'd want to be pretty cautious here on the pound. I always look at kind of these 1 hour totals. With the fact that the LP trend line's been going up, you can kind of see why I didn't pick this as being one of our bigger trades for the day. This would be more of it's hard to say it on the pound, but being short on CAD yen, being short the CAD is almost similar to being short on the pound, because even though it doesn't correlate as much as Canadian does, the actual pound does seem to be rising and falling along with oil prices, and not as highly correlated. If you were looking for something here on the pound, you could look for it to make a sustained break below the 42.50 level, basically break into these lows. But I would wait. If you are looking to do the pound, I would probably keep your risk pretty tight to the chest. If you were looking for a sell entry, and you probably want to be looking for a -5 on the 1 hour totals. But what you'd also want to be looking for is you'd want to be looking for that LP trend line to be breaking into lower lows. It's already moved quite a bit here to the downside. So I'm sorry, it's already moved quite a bit to the downside. It's already moved roughly, from yesterday, it's already moved roughly 80 to 90 pips. This is one to where if you did want to take this one, you'd want to keep your risk pretty tight. So you'd want to put your stop above a swing. So you could probably put your stop pretty tight above these swing highs right up in here at like a 42, more of like a 40 pip type of stop level. But you'd also want to be waiting for, like on the trend line, you'd want to see this thing starting to break into lower lows right in through here. You'd want to see this thing starting to come down. Looks like it's building some, a little bit of a base in through here. So it's not the best trading scenario today, just because kind of all three of those factors aren't really working in our favor yet. So that's why I've kind of stayed away from it. The pound is one that when we reconvene on Monday morning, I do like trading the pound in any type of retracement that it might have. You know, as we open the market today. Sorry, I was looking at a question that just came up. As we open the market today, you know, if the market does come down, it could, and oil comes down, it could lead the pound lower, which would probably lead our CAD yen into profitability. But I'm going to go up here, and you know, the levels that I do like on the pound is I like trading into retracements on the pound. And if anything, you know, as we go into, you know, the weekend and into Monday morning, you could quite frankly, you know, if it were to come up, if I can see the buyers come in a little bit on the pound and look for this to make a higher low, I'm sorry, a lower high. Wow, I got that one backwards, huh? A lower high and come up in and try to come up and re-challenge these highs right in through here. It seemed like there was a lot of resistance right in here at that 4,400 level. You can see that's where the trend line started to come down. When it retraced back up to 4,400, you can see that's where this things started peaking down, and that's what kind of coincided with this downtrend right in through here. You can see that's what it would look like today. You'd want to see this thing breaking lower as it would trace down. It also went -5 over in there, so that precipitated this longer bearish move in here. So I'd exercise some patience if you're looking for any short trades on the pound today. But I do like it coming back up. If it comes up and retests this 78.6 level, if it comes back up and you start to see, like right in here, there was a slight little divergence here. It started more going sideways in through here. But if you start to see this making lower lows on the trend line as it comes back up, I would favor kind of the short side into retracements a little bit better there on the pound. So if it does break through that support level, you'd want to certainly look for these things to make a turn, to shift. You know, the 1 hour totals is what I'll generally look at. The LP trend line, I said have that set to totals and I'm looking at a 1 hour chart. PitView indicator, I have that set to 1 hour totals. I want to be seeing those things break into lower lows. It's just kind of overextended itself a little much over the last 24 hours. Hasn't consolidated too much as of yet. Yeah, PitView is certainly saying buy right now. But if PitView says buy on that, that's where the dollar yen comes into play. I like going long the dollar yen if it breaks that high a little bit more than I do like going short the pound, because that's more of a reversal. If dollar yen breaks through this high, it has a lot more room to go. I don't know, you know, essentially what we're looking at here during the U.S. session, folks, we're looking at, you know, what's going to drive the market today. You know, and it's going to be U.S. stocks. That's what drove the market yesterday, and that's what's been kind of driving the market up until this point. So, you know, looking at reversals, especially one that's forming more of a reversal pattern like on the dollar yen, I don't think you really have to look much further than dollar yen today, based on what could occur in the market. PitView's indicating a buy, but I would not, at these levels down in here, you'd want to wait, even though it's indicating a buy, you'd want to wait for this thing to create some space. You never want to kind of trust it until it breaks into a key level. You know, on this case, back in here was probably the best one right in through here when it broke down in these lows, but you'd want to wait for some type of reversal to occur if you were looking for a buy on it. And also, dollar yen is probably given a better indication. You know, we like to kind of cherry pick the trades here. That would be a better buy indication. So, plus, if you kind of check out, let's see, where was this swing low at here? There's kind of an ABC correction here, but we're still favoring the short side. Today is not the day to go looking to trade for the sake of trading. we're going out to be too aggressive, especially if you've been following along this week. We've had many weeks that have turned horrible when we get a little too aggressive at the end of the week. So the pound, if anything, I'd be looking to sell. If it does come back to the upside today, I would actually still be favoring the sell side, but looking for it to make a retracement, a lower high, if you will, because overall the pound has been getting pounded. It's been reversing course to the downside on a dime, if you will. There was all this consolidation here throughout the week. It finally broke up and then just came completely back down. So you want to exercise a little bit of caution there when trading the pound. And I would still favor the short side on it. And then if it does start coming up, still look to favor the short side. But we can. This is one to where we probably wouldn't even have to talk about the short side until possibly Monday morning. Kind of delete some of this crap off my screen here real quick. All right. Kind of going around the horn here. Continue with the dollar pairs. There's no yet doubt Euro Aussie's going to the downside because, well, Euro Aussie's been on the short side here to the downside. So Aussie's been getting weaker versus the dollar. Euro's kind of consolidated right in through here. If we're going to be looking at anything, CAD yen is the one that's going to go down if the markets go down today. Dollar yen will go down if the markets go down today. We're in the midst of the U.S. session, so if the market does, we would have to, in order for Euro Aussie, like to go short Euro Aussie is to go short Euro and go long the Aussie dollar. So it's kind of dangerous to be going in and doing some of these cross currency pairs here today when we're favoring the side of we're favoring the probably the dollar or the CAD, like dollar yen and dollar CAD is what we're looking for to make lower lows here today. This would be like going long on Euro Aussie. That would almost be the same thing as going short on CAD yen, to be honest with you. In order for this to come back higher, you'd have to have a continuance of the market coming down. When the market goes down, the Euro dollar will probably go up. Aussie dollar will probably continue to the downside. Same thing on CAD yen. So it would essentially be the same risk off type of scenario. So we'd be basically doubling up on another risk off trade. Much like on CAD yen we shorted because it broke down through a consolidation level. Euro Aussie's breaking up above a consolidation level, and it's all being driven off the same thing. It's being driven off risk off scenarios. See, on something like Euro dollar, if you will, so Euro dollar in here, this Euro would, if the market continues to the downside, Euro could probably continue up. Aussie may continue down, or Aussie could actually go up, actually, because Aussie would be in risk off. I'm sorry, you're right. Aussie would continue down in a risk off scenario. Euro would continue to the upside. Same thing with CAD. If the markets sell off today, the CAD will continue getting weaker. Yen would continue getting stronger if the markets continue down. These would both be kind of risk-off type of trading scenarios. Whenever we're talking about risk on and risk off, we're essentially just saying what direction should these pairs go if during the U.S. stock session, if the U.S. stock session continues trading off of risk aversion, which we are open now. The Dow's down 116, S&P's down 14. Let's see how long we've been open now. We've been open for what, about 10 minutes? NASDAQ's down 29. So we are looking at more of a risk-off scenario here. So if that does continue to the downside, CAD yen will continue down. Euro Aussie will probably continue up. So whenever we're talking about risk on, risk off scenarios, we're talking about what overall direction. Euro Aussie would probably go up, CAD yen will go down. So it would be kind of doubling up on the same trading scenario. So looking at this consistently here, I would much rather just keep my risk at bay. I often tell people on Fridays that, you know, I'm willing to speculate on CAD yen going down should the markets continue their bearishness. Dollar yen would be kind of the backup scenario should the markets recover. By the way, if the markets recover, that Euro Aussie will probably go down. So it'll reverse course also if the market starts to continue to go up. So for now, we're just going to stick with the short on the CAD yen. And if you choose to, quite frankly, if I get stopped out on CAD yen, should the market reverse course, I just want to kind of mention this as just my own personal trading. You know, what, from Wednesday to Thursday to today, what is that? It's like 160 pips for the week, somewhere around there. I don't really want to give that up. I'm willing to give 50 pips back, but I really probably will not even go long dollar yen should it break that high. It could be a hedge scenario, but since it's Friday, I just really don't feel the need to double up. A lot of these different, like euro dollar right in through here, you know, it's also favoring. You can kind of see here on the LP trend line, it's sideways in through here. It's been making some higher highs. Market continues down. It'll probably break up to the high. Same thing with dollar Swiss. Dollar Swiss, if the market continues to the downside, that'll probably break out to the lows of this consolidation range right in through here. But like I said, the market continues to the downside, CAD yen will probably also make a sharper move down. So basically we'd all, you know, all of these would be risk off scenarios. Fridays, we always have kind of the warning thing for those. I know there's a couple of new students in here actually. We always have kind of a warning scenario on Fridays. If it's been a good week, you know, I don't mind taking shots on Fridays. However, after the European session closes up, after the German session closes up for the day, you know, we have only about five hours left in the market. I don't like kind of being too aggressive on Fridays. It's not the day to kind of go out there and look for other opportunities. Mondays are a different story because, you know, when it's earlier in the week and even in midweek, you can kind of look to put your head on a swivel and say, okay, well, if I get stopped out, I can't lick my wounds too long because there's other opportunities. Fridays are generally not those days for us. We kind of look at it and say, hey, I'm willing to take a shot here, but it's not the day to go out and just go looking, go hunting for further opportunities when you kind of got a narrow time span to work with. I usually like to just, if I do get stopped out, let it go and close, put the close sign on my business and go from there. Besides the CAD yen and like on the year, speaking of euro dollar and dollar Swiss though, I will kind of show you this. You know, the two things I was looking for here today with the market being down, I'll show you this on dollar Swiss because I thought this was actually an interesting trade right in through here. We were able to make some money going long on dollar Swiss right in through here. However, you know, the fact that it's made such a consolidation level right at 9,900, it's a pretty straightforward support level that the dollar Swiss has been coming into. The two trades that I was really looking at today for more risk off types of scenarios, I was teetering between the CAD yen and actually dollar Swiss. My thought process being that generally when our markets go down, the Swiss will get stronger, euro will get stronger, yen will get stronger. So looking at short positions here on dollar Swiss, should the markets tank and it breaks through this 9,900 level. So that I'm showing this to you just as my other alternative that I was looking for a trade besides CAD yen. CAD yen just happened to be making the better kind of given the better signal here this morning after breaking through some consolidation, everything kind of pointing in the same direction. But dollar Swiss, it broke up above 9,900 here, and you can kind of see, you almost see a semblance of like a head and shoulders top almost that it's formed right in through here, much like the CAD yen had formed kind of that double bottom, but it broke lower through that consolidation. It was forming this consolidation right in here at the 9,900 level. I was considering either shorting dollar Swiss or shorting CAD yen there at the start of class, but I went with CAD yen just because it looked like it was making the better signal, if you will. It was everything was kind of lining up for that. So just to kind of review here, I know I tend to talk and spout things off. Essentially, we're looking for really two scenarios here. Short CAD yen, essentially you're looking during the US session, and what you want is you want that Dow, you want that S&P, you want oil, you want the NASDAQ, you want all of that stuff to go down. If it goes down, if it continues selling off, much like it did yesterday, we got a good shot on this one. If it does start to recover, if it does start to come back to the upside, then this will probably be stopped out. That presents the second scenario, and really the two scenarios that could happen today. Markets either continue selling off or they'll recover and potentially start going up. If that happens, this dollar yen will probably break through, and you can get a long trade on dollar yen. That's basically the two directions. Well, there's three directions the market can go. It can go up, down, and sideways. Sideways would mean that potentially you could get whipsawed out of both these scenarios right in through here. Any other trade or cross or any other currency pair or anything else, they're all kind of going to be at the mercy of this U.S. session and the end of the European and London session, or the European and London markets, the DAX and the FTSE. They're all going to be at kind of the mercy of whether those markets sell off or whether all those markets come up today. So all of them are going to move in tandem with how these currencies normally react to risk appetite and risk aversion. And if you are wanting to manage your risk a little bit more today, since it is a Friday, let me pull up CAD yen since we're right here at the end of class. Again, not in really any trouble here. I mean, it broke through and it's just hovering at this moment. But, if it gets into like 11 o'clock, 12 o'clock, 1 o'clock, and you see this thing just start to consolidate, you can always just move your stop down using a 3-bar reversal. So just count back the last 3 candles and just continue moving your stop down. Essentially what that would look like, if you had your stop up here, let's say, and as it moved down, you'd basically count back. You'd count back 1, 2, 3 candles. You don't count the working candle. You count 1, 2, 3. You'd put your stop above the high of the previous 3 candles. If it continues down some more, count back 1, 2, 3, and just continuously place your stop at the high of the 3 candles if you want to minimize some risk. Next week could start off pretty interesting. One of the things that keeps on sticking out in my mind, and I'm kind of going to go off the cuff here because hopefully by now there's kind of a synergy that exists between stocks, futures, commodities, currencies. There's certain things that exist in between all three of those all the different investment instruments globally. The one thing one of the other reasons why after 8:30 I was looking at more of a risk-off scenario was the fact that we did have some better news there on the CPI this morning coming out of the U.S. It's going to be interesting if we continue having, PPI came out better than expected. These are all inflationary numbers. And generally what the market has been really tuned in on right now in the U.S. anyway, and a lot of markets globally have been in tune on this also, is the Federal Reserve and their probability of raising rates sooner rather than later. Meaning, can they raise in March? Will they raise in June? When are they going to raise rates? Again, if you will. it seems like anytime the probability has increased that the Fed could raise rates, meaning if inflation's going up and the Fed is in the midst of raising rates, as inflation goes up, that is the reason. That's one of the primary mandates is for them to, is as inflation goes up is to raise interest rates. And that's where the cycle that we're in right now with them raising rates in December. However, if those have been following along for the past year or so know that anytime it's become increasingly higher probability that the Fed could raise rates, the market has not liked that scenario one bit. They don't like the scenario of the Fed raising rates sooner rather than later, and oftentimes it's caused a little bit of panic selling in the market whenever people see good economic numbers. As we go into next week, if we continue seeing positive economic numbers coming out of the U.S., you may see the same scenario we saw back in at the end of the year in 2015, that as good economic numbers came out, you saw the stocks start to tank. Along with it, you would see things like dollar yen start to go down, euro dollar would start to go up, dollar Swiss went down. All those different scenarios there towards the end of the year last year occurred based on, whenever the Fed had a higher probability of raising rates, because definitely the stock market did not like that idea one bit. See if I pull it up on like a daily chart as we got into like right in here, anytime the euro dollar went up in through here was generally because, all these spikes up in the euro dollar were all caused by the markets, the U.S. stock market selling off. And then right in through here, when we went sideways for the longest period of time, right in through here, it seemed like it was all based on the market selling off. And since the beginning of the year, the euro dollar has been getting stronger because since the beginning of the year, the stock markets have been selling off. So it's something that we can think about as we go into next week. I always look at fundamentals. We trade technical when we actually execute on trades, but I'm also one of those people that always thinks about what's driving the markets. And if we do start getting better and better economic numbers, you could potentially see the stocks start to sell off even more, which would certainly bring in more risk off scenarios for us, which we actually enjoy having those scenarios because of the fact that the markets seem to go down much faster than they go up. Anyway, that's more things that we can chat more about on Monday morning during class. Pretty simple scenario here today, folks, though. Market continues down. We're already short CAD yen. Comes back up. You can starts to go back into positive territory. You can look for that potential opportunity on dollar yen. Let me go ahead and save our trading worksheet for today. To 1916, and then I'll share it with you. I've been doing so much talking about this today that I haven't I almost feel like I've been talking out of both sides of my mouth. Maybe they should put me on CNBC. Put me on CNBC, man. Put me in, coach. All right. Under handouts, you'll be able to see the handouts for today. Yeah, talking out of both sides of my mouth, that puts me in as far as qualifications on a resume, that would qualify me to be on CNBC, or it could qualify me to be on the head of a central bank, especially one in Europe, or it could qualify me to be a CEO of a company too. All of those are open to people that talk like that. So there are your handouts for today, folks. I'm going to go ahead and close things down here. Sure, Eric, I'll check that out, buddy. I'm going to go ahead and close things down.